Cool. So firstly, I just want to say good morning to everybody. Thank you all for joining today's webinar. My name's Lily Williams and I'm Partnerships Manager at BGL. Today, I'm joined by Craig and Brendan from Selfwealth. Selfwealth is an Australian-owned and operated business and became a publicly listed company on the Australian Securities Exchange in 2017. Founded in 2012, Selfwealth was initially created as a community for investors to facilitate discussion around investing on the share market. Today, Selfwealth is a leading Australian online share trading platform known for its competitive fixed cost brokerage and user-friendly interface. So before I hand you over to Craig, I'll just cover some general housekeeping. So today's session will be recorded. If you miss anything or you need to jump off early, you will receive a link to rewatch it at a later date. And the recording will also be posted on YouTube. So we've got a YouTube channel. You can view that another time also. The Q&A panel will be active. So any questions you've got, please pop them in there. And we've got Jeevan and Brendan online to answer some questions, either as we go or towards the end of the session. So Craig, I will hand it over to you to kick things off.
Lily, thank you very much. Thank you for that great introduction, and thank you very much for hosting me. I will just share my screen, and there, perfect. Everyone can see the presentation, okay?
Looks great.
Fantastic. So look, thank you very much. Today's topic I want to talk about is the intergenerational wealth transfer. It's an important topic, and it's certainly a topic which is getting a lot of media attention. So it's a real privilege for us to be able to share some of our thinking from a Selfwealth perspective with the audience. Importantly, just the standard legal disclaimer. Clearly, anything here is not considered advice. Everyone needs to take their own advice with respect to this. And any of the statements should not be relied upon, but I'll just leave that disclaimer there. The things that I would like to cover today is an introduction to Selfwealth. I want to talk about the intergenerational wealth transfer, some of the trends that exist both globally in Australia and some of the trends that exist globally as well as in Australia, some of the statistics and key points. I then want to talk about subjective well-being and goal setting and how that can be linked to the intergenerational wealth transfer. Then just talk through some next steps that people may consider, and then really happy to open up to questions. Just really following on from Lily's sort of introduction, Selfwealth, as you can see there, was founded in 2012. We are listed on the ASX. As a listed platform, you would expect that we've got all the governance and controls that you would expect as a listed business. It's a real privilege for us. We've got 128,000 active investors, and roughly with about 10.2 billion funds under management. And we're based here in Melbourne. A little bit of background about myself. I joined as the CEO of Selfwealth late last year. I've got roughly 30 years experience across both stockbroking, asset management and wealth management and financial planning, both here in Australia and overseas. I've got a particular focus on wealth management trends across the Asia Pacific region. I have previously lived and worked up in Japan, and I've also undertaken quite a lot of research in areas around superannuation, well-being, and the link to financial planning. It's something that I'm really passionate about, and it's something that I have undertaken a lot of research formally with respect to that. And I've been an active contributor on a range of topics around financial services. Selfwealth has a really strong and capable leadership team that really shares our vision about we turn up every day to deliver for our customers. We do think it's a real privilege for us to work in financial services because we're handling clients' money, and that is a real privilege. And when we start talking about some of these trends that we're seeing, that privilege is only going to continue. So we're really, really passionate about what we do and how we turn up every day for our clients. In terms of what is the intergenerational wealth transfer, it's really a significant topic at the moment. And if I talk through it, first of all, significant wealth movement. Intergenerational wealth really involves the passing of assets, property, and that financial wealth from one generation to the next. The process is significant because it really does represent a substantial movement of capital, both within families, but also the broader economy. And when we talk through that, you can understand the broader economic impacts. In terms of the economic impact, the transfer of wealth can significantly influence economic stability and growth. And those large transfers really will increase investment opportunities, but also provide that security to the next generation. Wealth inequality, the manner in which wealth is transferred can either exacerbate or mitigate wealth inequality. And there's a lot of opportunity with intergenerational wealth transfers with respect to dealing with wealth inequality. Estate planning, estate planning is really critical for what I would call the smooth transition of wealth. Can't be underestimated, and I know the audience would absolutely agree that understanding the needs of individuals and really factoring that into estate planning is quite critical. Retirement and healthcare, with increasing life expectancies, older generations might need to consider their own retirement and healthcare needs before sort of transferring wealth. So that's also an important consideration. And then cultural and emotional impacts. So we know that wealth transfers are not only financial transactions, but they also carry that really strong cultural and emotional significance as well. And that can affect family dynamics, relationships, etc. So it's a really important thing. It's a really important topic for people to consider, and that's why it's so important. If we just look at some of the trends, and the trends are really significant. There's a substantial increasing magnitude of transfers. So the scale of transfers is expected to really grow in the coming decades. McKinsey projects that from now until 2045, just in the US alone, that the transfer is going to be $84 trillion, with a significant portion going to heirs and charities. The rising importance of emerging markets. We've seen markets, in particular China and India, grow. They've had rapid wealth accumulation, and that's been obviously influenced by the economic growth that those economies have seen, and that increasing sophistication that they've seen. So therefore, how that's going to play out in terms of the emerging markets as that money gets shifted is quite important. Increasing longevity and aging of population, the increasing life expectancy it really means that wealth transfers are occurring later on in life, impacting financial stability and planning for those younger generations. And there's a lot of studies with respect to that. And then the changing family structures. We're seeing a changing in family dynamics. We've got higher divorce rates. We've got a prevalence of really those blended families. That complicates the wealth transfer process. So how these changes in family structures are considered and have sort of come to bear with respect to wealth transfer is going to be quite important. There's also a growing trend among the wealthy to allocate portions of their wealth to estates, portions of their estates to charitable causes, and that's going to have it's a significant global trend that will impact and have a lot of social impact. The other global trend is technology and digital assets. So the rise of digital assets, in particular cryptocurrencies, presents new challenges and opportunities with the wealth transfer. So really ensuring that proper management and transfer of those assets is going to be quite important. And then gender. Women are expected to control an increasing share of wealth. And that's UBS have done some research on that in 2023. And so that's another major global trend. So there's quite a lot of really interesting global trends that are happening with respect to intergenerational wealth. If I look at the Australian trends more specifically, intergenerational wealth transfers in Australia are expected to grow significantly. The Productivity Commission report it basically indicates that from 2002 to 2018, approximately 1.5 trillion was transferred, with projections suggesting that this could rise fourfold by 2050 as household wealth grows. So we're going to see a substantial amount of magnitude and impact in terms of Australia. In terms of women's inheritance, women in Australia are set to inherit 3.2 trillion. It'll be the largest intergenerational wealth transfer in the country's history. And that's going to really have a substantial impact in the way that obviously females inherit, but also the way that various organisations look to provide support and service for that as well. The housing wealth divide, the intergenerational wealth gap in Australia is, obviously has widened significantly, and research shows that older Australians have accumulated substantially more more wealth in property compared to younger generations. So how that plays out in terms of the bank of mum and dad is also going to be quite an important consideration as well in Australia. And then retirement and superannuation. As baby boomers retire, their superannuation balances will begin to deplete through retirement, consumption, and potentially inheritance processes. And by 2028, most baby boomers will have retired, significantly impacting the wealth management industry. So those demographic shifts really necessitates careful planning to manage the transition of wealth to younger generations. And then finally, estate planning, and I know the audience would absolutely agree and concur with this. Really these complex estate structures. So the transition of wealth really involves family arrangements, really understanding those needs, particularly around companies, trusts, self-managed super funds, and having a proper estate planning process in place is going to be even more critical. So just really following on those key points, as I said, the magnitude is substantial. We're expecting a fourfold increase by 2050. A substantial amount of wealth will transfer to females, and there is the potential, with the right amount of planning and consideration, for us to be able to see an improvement in the younger generations. An area that I now wanted to talk about is subjective well-being, and this is something that I've done some research on, and it's potentially an opportunity to engage with individuals throughout the process to understand their goals, throughout the discussion around intergenerational wealth and estate planning, to understand their goals. And subjective well-being is really an individual self-assessment of their own happiness and life satisfaction. The important thing here is that it's not about how somebody says what the definition of happiness is. It's how you feel and what your own understanding is with respect to that. There's a number of surveys that you can actually use to measure well-being, such as life satisfaction, which is positive effect and negative effect. What I wanted to talk about here is, in particular, is understanding subjective well-being really is an important framework to help with goal setting. So, as I said, subjective well-being refers to your own self-assessment of your own happiness and life satisfaction, and really the reactions around that. There is a very famous academic called Ed Diener, and he's typically measured subjective well-being through a survey, which I'm going to talk a little bit about in a second. So what I would say is for when you're dealing with individuals through this sort of stage of life, understanding, well, what's going to make them happy and what could potentially make the generation that maybe where assets might be getting passed to happy is an important consideration. If we look at the DINA model, this is something that is a really interesting model to consider. It goes through a series of questions. Effectively, respondents or individuals are asked to state their own view on these various sets of questions. So in most ways, my life is close to ideal. They rate themselves on a score of 1 to 7, with 1 being strongly disagree, with 7 being strongly agreeing. The conditions in my life are excellent. I'm satisfied with my life. So far, I've gotten the important things that I want in life. If I could live my life over, I would change almost nothing. These are really important questions, and these are questions that when they're delivered to somebody, it does force you to really think about you know how you rate yourselves, and it can be used as a tool for goal setting. So as an example, it could be if this was being undertaken by the individual that was considering a wealth transfer, so far I've gotten all the important things that I want in life. It could be, well, what don't you have in life? What are the goals that are going to satisfy you? But equally, if I could live my life over, what I would change almost nothing. Well, once again, how does that sort of turn into a goal? So the idea by this model is that it really does allow you to stimulate a conversation and start to think through, well, if I've rated myself, and as I said, this is your own assessment, if I've rated myself not at sort of 6 or 7, what are the actions or activities that I can undertake that are going to improve my own well-being? Understanding the gaps in subjective well-being really does allow for targeted interventions that address the what I would say the unique needs of different populations. You know, by understanding or by pinpointing specific areas where individuals felt dissatisfied, tailored programs can be developed to really enhance the overall life satisfaction and that emotional well-being. So really quite an important thing, and understanding what I would stress here is really understanding the baseline from here. If you go back and you say, well, okay, how do I rate myself? And then understanding, well, what's the difference going to be, i.e. the delta, where I can actually, what are the goals that I can put in place that are going to basically deal with that difference and improve my own well-being. If we talk about really talking about now across the generations, and there's a number of things here improving well-being and goal setting across the generations that could be considered and applied. And these are thoughts that I've got, and I'm going to talk through this in quite a bit of detail now. So first of all, understanding the gaps. So identifying families that can collaborate really to identify specific well-being gaps, such as, you know, whether they're mental health issues, physical health or challenges, or financial stress. This collective approach can ensure interventions and enable those interventions to happen across the family. So the idea being here, where families can talk openly about, well, how are they feeling with their own well-being satisfaction or life satisfaction? How is the other generation or the younger generation feeling? And then have a conversation. And it could be that intergenerational wealth transfers could be a tool to improve that specific well-being across the generation. So really encouraging sort of open communication and saying where families can work together, it can have a fairly major impact. Tailored intervention, really just sort of emphasising this again. Older generations might benefit from healthcare support, while younger generations might benefit from financial education and career guidance. So a lot of focus there on, as I said, understanding the gaps, working together, having those tailored interventions. Resource allocation, efficient resource allocation is possible when families understand the wellbeing gaps across the generations. So this really allows resources to be directed towards the areas of highest need. And this is really just, once again, emphasising if you can have that, the family understanding each other's position regarding wellbeing and understanding those interventions together, having a common set of goals, it can be quite powerful. And then continuous improvement, regularly assessing how are you doing, how as a collective, and are you on track? Setting goals across the generations is a really interesting sort of position to be in. First of all, establishing a clear baseline. Understanding the starting point for each generation really does help set realistic goals. This really involves setting the current state of well-being and really identifying those areas for improvement. Creating personalised goals, the second item. By identifying individual and generational gaps, families can really create personalised goals that are meaningful and motivating. For example, as I said, grandparents might focus on health goals while parents work on career achievement, and children might set educational objectives. And that was a piece of work done by Ed Diener and Seligman in 2000, early in 2000s. Tracking progress together. Families that can monitor progress towards their goals collectively, celebrating achievements and making the necessary adjustments. This fosters that really supportive environment where each generation encourages others. And then enhancing motivation through collaboration. That collaborative goal setting and achievement can enhance motivation across the generations when family members see their efforts contributing to the overall well-being of the family. They're more likely to stay committed. So what I'm really trying to emphasise on these first 2 points is understanding the gaps together, working on those specific gaps together, seeing how you can set goals together, and then tracking that together can be quite powerful. And if you do that, if it can be done collectively, it can improve the well-being across the generations, and the intergenerational wealth shift can be used as a way to enable that well-being across the generations. If I think about the practical steps for families, it is about open communication. It really does, what we're trying to say here is encouraging that open and transparent discussions around individuals' and collective wellbeing goals. It really does help with understanding the needs and challenges, and then fostering that supportive environment. Shared activities, engaging in activities that do promote wellbeing across the generations is quite important. And then education and awareness, which I know everybody in financial services is really focused on, but continuing to promote financial literacy within the family, understanding the importance of savings, investments, can actually can actually contribute to the overall well-being. So, just in summing up this particular slide, as I said, really, if you can apply the Diener model to stimulate the conversation, to understand how the various generations view their own state of well-being, use that as a way to actually focus on understanding the gaps, then focus on being able to set goals across the generations, and having those sort of open communication and that focus around education and awareness could be quite powerful. with the outcomes being to improve the well-being across the generations as the various as sort of as intergenerational wealth transfers are considered. So if I think about sort of some of the practical next steps, really just sort of focusing on where we are at the moment, the amount of money that's forecast to shift across the generations is substantial. Understanding those trends, understanding the different nuances, understanding the different nuances around those trends is quite important. I know I'm absolutely sure I'm preaching to the converted here, but the importance of estate planning and really well considered estate planning is really critical. And in particular, understanding how that needs to be adapted with blended families and changing family circumstances is quite important. Given some of the dynamics that are out there, advocating and understanding, well, how can the families come together to understand where everybody is with respect to their own well-being, how that relates to their own goals, and how the families can collectively have open and transparent communication around that, and ultimately lead to improved well-being is something that is quite important. So that's really just concludes the more formal part of the presentation.
So firstly, just want to say thank you both to Craig and Brendan for joining us. Very informative, and I'm sure everyone took something away from today's session. We do have Selfwealth as a gold sponsor for BGL's RegTech event, which is kicking off next month. So make sure you've registered yourself and your team, and we'll see you there. It is a free event, so make sure you bring everybody along. And that brings the webinar to a close.